Hey traders, this is Christian from Hertz Tribeca Trade Group with your end of day recap for Thursday, and another ugly day for stocks in general. Across the board, we had SPYs down 65 basis points, Qs down 40. They were up at one point about 25, 30 basis points, but couldn't hold on to the gains, something that's been a familiar theme. Mid caps were actually down the most out of the caps, down 1.1%. That's the MDY ETF. Small caps down 1%. Uh, and transport's down 1.1% again. So we're just seeing a pretty much a breakdown in a lot of things. I've got the SPY chart in front of me. Depending on how you want to slice it and dice it, maybe we've got a little bit of support here, but I see a breaking of the 50-day moving average, which we saw yesterday. Further down here, next stop maybe the 100-day moving average. I guess you could maybe say here, on this candle, we could see a little bit of support, but I also see a breaking of the value area as well. So no matter what indicator you use, I see breakdowns in just several spots. I don't think it really matters what you look at. I've got an uptrend line here as well that looks like it's been violated. So if you look at trend lines, if you look at value areas like I do, as well as the moving averages, we got breakdowns. Qs, just kind of cover the Qs as well. Qs, you got a sell signal here, also moving into the value, violating the uptrend. Haven't completely broken the value area, but we'll look at Qs in terms of this chart as well, just to see the moving averages as well. They're resting on the 50-day moving average, and then you go to IWM. IWM broke the 100-day moving average pretty decently here. You do have a little bit of support here, but again, I don't know if IWM broke yeah, it did. It broke the value area today as well. So you do have this little bit of support here for small caps, but all in all, we see a lot of things turning down here, and it's not just in the major averages. It's also energy. We talked about this a little bit earlier today. This candle, I had a feeling that this candle wasn't going to look too great. The oil is still above the yellow line, the 5-period exponential moving average, but you look at XOP. These were amongst the worst performing sectors today, and a failure at the 200-day moving average didn't overtake it. Again, this is not dividend adjusted, but you can kind of see, even if we were just above here, it looks like a failure at the 200-day moving average. Same thing with XLE, same thing with OIH. So just ugly across the board. OIH was down 2.7% today when oil, it was just down 20 basis points. So, the sectors, the stock sectors with the commodities really showed some weird things today. Sorry, my voice is cracked. So before I go into that with oil and energy stocks, if you also look at steel names also, this is the SLX ETF going towards the 200-day moving average. We talked about iron ore breaking down over the last couple of days. I'm not going to show that chart again. Iron ore was actually up just a touch this today, as well as copper. Copper had a big down day yesterday. Copper was actually up 90 basis points. And then the banks, even with the earnings from JP Morgan, Citi Wells, I see KRE was down 2.1%. I think my take on the bank weakness and why I didn't really want to play any of the banks for earnings, not even giving anything a shot to the long side, was because if the global tensions continue, it's going to be harder for the Fed to raise interest rates, and that's not good for the banks. I think the banks were already thinking that they were going to get a couple more rate hikes this year, but it seems like rate hikes is going to be the last thing that you should be worried about, I think, right now in this market for the overall stock market. However, for the banks, it's not going to be good for them if they don't foot a couple more rate hikes this year. So moving on, bonds continue to move up a little bit. They've really, I said that I was going to look at the bonds as a long or gold as a long if we got above resistance. Bonds are above there. We saw a big order in TBT this morning, which is the inverse, 2 times inverse. So basically the opposite of bonds, twice as much. These were swept, and that was enough of a reason for me to keep me out of going long bonds. Bonds, I really didn't. I really don't want to go long because they're still underneath the 200-day moving average. Gold is another one where I was actually going to try to buy a little bit of gold after the close yesterday. I looked at it again today. I didn't buy it. I could be making a mistake here. It is above the 200-day moving average. I am sitting long ABX, and I'm just watching similarly, what I talked about with energy and with oil. They don't seem to be confirming one another. And the same thing going on with gold and gold miners. ABX was down 1.9% today on a day where gold is up 50 basis points. Just doesn't, to me, add up. And same thing with gold miners. Gold miners, still underneath the 200-day moving average. This is junior gold miners, excuse me, down 3.5%. So something doesn't seem right with the gold trade to me. And that's enough to keep me out of it. Also, if GDX maybe got above the 200-day moving average today, maybe I would have taken a shot. I was actually looking at a couple names, but you would think with gold up as much as it's been the last couple days, these things would be screaming higher, and they're not. So that's kept me out of a gold trade. We'll see if I'm right or wrong. We have a long weekend. Besides everything else and the events going on, we saw today that the mother of all bombs was dropped today. Um, these things are going to weigh on the market. There's no way around it. These things are not good for the market. The market usually jerks back when you see these things. And, I would have said, besides these events, I would have said that I don't like to really hold a lot of positions going into earnings. So the earnings season would have been enough for me to trim positions. But now that you've got all this going on, I think you just want to tread carefully here and kind of wait for some indicators to rebound a little bit. Like I said, copper didn't completely break down. We did see a put buyer, I believe, for FCX next week. So, what originally got me bullish right around the election, I'm sorry, I don't mean to go all the way back to the election because that's such distant history, but or so far away at this point. But it really kind of portrays why I got bullish in the first place. Was we saw a lot of things. It wasn't just, the uncertainty over the election that usually adds volatility. Once that event's over, the market usually gets a footing again and goes back up. But there was a lot of other things going on that week, or the week of the election. Copper was rallying, the Baltic Dry Index was rallying. There was a number of things that were really ticking up even before the election, which really got me turned onto the market. And now we don't see that anymore. The Baltic Dry, that's actually a positive, which could tell me that if I can bring this back up, the Baltic Dry looks like it's doing okay. So I still think that we're going to be in a pattern of digestion here for the next week or two. We also have to get through the voting on the government shutdown, which is going to be at the end of April. So I think there's enough. There is enough events. There's enough geopolitical things going on. Issues, I should say. Um, Besides earning season, which I typically don't like to really take a lot of positions, and the option activity gets very noisy. But I think you just want to be patient here and take your time. Wait for things. Things are moving down. Wait for them first to stabilize. Wait to see some type of reaction that we're going to turn back up. Otherwise, I see no point right now to jump in and take shots at things while things are moving down. So, if you've got a long-term horizon, great. But in terms of adding new positions, I would just rather be a little bit patient right now, and then also just watch for the buyers to come back into this market. If you look at today's orders, really lackluster. Probably the most interesting trade I would say was GD, General Dynamics. There's EPD, a couple small orders. Like even that ABX trade was very small. There's a lot of options that are going up for at a price, the price per contract is like 10 cents, 15 cents. So just a lot of nitpicky orders, not anything really sizable. And I know I've been talking about that all week, but that's the other thing that I'm looking for besides the Baltic Dry and the global economy humming. I'm really looking for some sizable call buyers, and we don't see those right now. other than that, maybe that GD trade today. There was more aggressive, there was more interesting put orders, I thought, today. Um, this order was interesting. On ASHR, we've been seeing some call buying a lot in the China Shanghai. Again, this is not like FXI. It's a very, very different. The Shanghai has been actually holding up pretty well. So we've been seeing repetitive repeat action in the ASHR ETF. Again, that's China Shanghai. That's A shares, not H shares. There was a couple of gold mining trades that did go up, even though there was weakness in the miners today. There was a January 27 call buyer in GDX. There's also some August calls in GDXJ. And then on the put side, a couple interesting orders there. Big block of Kellogg's as well. But Kellogg's has been a tough trade in terms of we do see a lot of call buying going on in the consumer staples, and they a lot of times they don't amount to much. So I kind of refrain from some of these. I've been fooled once by a lot of consumer staples orders, and they don't amount to anything. So I think you have to be really picky with those. Bring up that order. There was 8,000 that were swept. That was a pretty sizable trade, 70 cents. So that wasn't a small order. So that was a decent sized order in Kellogg. What else for the day? I feel like there's always some other things to talk about. I talked about bonds and golds, so we'll have to keep an eye on those for next week. The VIX also is up, so we got a long 3-day weekend. I think this was a pretty tough week for a lot of traders who were long and weren't playing both sides. I played a few different put orders today, but I certainly didn't go crazy with the put orders this week because the reason why I'm not doing that is I think this is a temporary. I don't mind day trading a little bit on the put side, but as far as the swing trading, I think we're going to come out of this. I don't know when, but when you have this many geopolitical issues going on right now, usually that ends up being a buying opportunity, not something that you want to sell into. Um, it usually fizzles out. I just think we have a long weekend. If we weren't jumping into earnings season, I probably would have been a little bit aggressive with taking a couple shots and some things. But I think we're going to have more chop. At least, like I said, I want to get through a third of the earnings season before I really start to look at longs, and also wait for the evidence as well with option activity and some of the global indicators turning up, but I don't think we're there yet. So anyway, have a great weekend and enjoy it. I guess get some rest and relaxation after this week, and I'll see you guys all next week. Thanks, everybody.